Good morning. Today is Tuesday, October 24th, 2023, and let's get started. I'm going to go ahead and read the summaries I've created for the Wall Street Journal today. And the front page, first story is 2 more hostages set free. So Hamas has released 2 elderly women hostages on humanitarian grounds, while ongoing negotiations concerning the release of 50 other hostages hit a snag over Israel's refusal to allow fuel deliveries into Gaza. The talks involve Hamas, Israel, Qatar, and Egypt, focusing on the potential release of hostages in exchange for humanitarian aid, including fuel. Israel insists on the release of all hostages before approving fuel deliveries, voicing concerns that the fuel might be diverted for military use. The 2 released women, identified as Yocheved Lifshitz, 85, and Nurit Cooper, 79, were kidnapped on October 7th during a Hamas attack. Their husbands remain captive. Public pressure is growing on the Israeli government to negotiate a deal for the release of the remaining hostages. President Biden expressed his commitment to securing the release of the hostages during a phone call with Israeli Prime Minister Benjamin Netanyahu. As negotiations continue, Israel intensified its aerial bombing of Gaza, and the U.S. urges Israel to delay a ground offensive. After a recent aid convoy entered Gaza, there remain disagreements over the inspection of these convoys to ensure no weapons are being smuggled. The situation remains tense, with the release of hostages being intricately linked to the provision of humanitarian aid and potential ceasefire talks. Okay, on to the next story. Chevron to buy Hess for $53 billion. Summary. Chevron has announced its plan to acquire Hess in an all-stock transaction valued at $53 billion. This major merger comes on the heels of Exxon Mobil's recent agreement to purchase Pioneer Natural Resources. Through this acquisition, Chevron seeks to diversify and upgrade its portfolio. It will also gain access to an Exxon-led partnership that oversees a significant oil discovery in Guyana, as well as additional U.S. share assets primarily in North Dakota. This move by Chevron underscores the company's belief in the enduring demand for fossil fuels, even as the global push toward renewable energy sources gains momentum. That's AstroTurf. Nobody cares. People just want cheap energy. The International Energy Agency recently projected that the global demand for fossil fuels will peak this decade. The deal offers Hess shareholders 1.025 shares of Chevron for every Hess share, which represents a premium of 4.9% from Hess's closing price and 10.3% based on the stock's 20-day average price. Chevron expects significant synergies from this merger, estimating cost savings of around $1 billion before taxes within a year after completion. The most valuable asset Chevron will acquire through this deal is Hess's roughly 1/3 share in the oil and gas reserves found in Guyana's coast, which in collaboration with Exxon and China's CNOOC has escalated Guyana's oil production exponentially in recent years. Critics of the merger, such as Mark Van Baal of the climate-focused investment group Follow This, argue that Chevron's decision contradicts the goals of the Paris Climate Agreement, which is a load of shite. However, Chevron's leadership maintains that oil and gas will remain crucial for many years and that the company can support a transition to a lower carbon future while acknowledging this reality. The acquisition is set to finalize in the first half of 2024, pending approval from Hess shareholders and regulatory bodies. Staying put in Gaza. If I die, I die. So brave. Summary. In the midst of the ongoing conflict, many Palestinians in the northern Gaza Strip refuse to leave their homes, despite Israeli airstrikes and the looming threat of a ground offensive. Their refusal is rooted in the fear of permanent displacement, much like the trauma experienced by their ancestors in 1948 during the Arab-Israeli War. This event, known as Nakba, or catastrophe in Arabic, saw over 720,000 Palestinians displaced. Basil Abu Sada, a 35-year-old software engineer, and his family remain in the town of Jabalia, where their ancestors resettled after being forced out of what is now southern Israel in 1948. Basil, like many others, fears that leaving might mean never being able to return, leading him to this sentiment: if I die, I die. The Israeli military, anticipating a ground invasion, had advised over 1 million Palestinians to relocate to southern Gaza, and a directive met with skepticism by many Palestinians. They worry about being permanently forced out of Gaza, and despite Israeli assurance of creating a safe zone in the south, trust remains low. The traumatic memory of the 1948 displacement remains a potential force in the collective consciousness of Palestinians in Gaza. The current conflict has intensified these fears, with many choosing to stay in their homes or seek shelter in places like hospitals or churches, even though such locations have also been targeted. The article also mentions that the south of Gaza started receiving humanitarian aid, but living conditions continued to be dire, with shortages of electricity, water, and a deteriorating health system. As the conflict escalates, many Palestinians are making the painful decision to stay in their homes, echoing a sentiment of enduring in the face of adversity and resisting another displacement. Okay, let's go to the next story. Bond trades at 5% for the first time in 16 years. Summary. The yield on the 10-year U.S. Treasury note reached 5% for the first time in 16 years, leading to concerns in the stock market, rising mortgage rates, and fears of economic deceleration. This significant increase in yield, up from about 3.8% at the beginning of the year, has resulted from investor concerns about the Federal Reserve raising interest rates to counter inflation. Recently, the pace of the bond market sell-off has intensified, causing significant fluctuations in the 10-year yield and triggering anxieties among investors. These concerns are also mirrored in the stock market, with major indexes retreating from their summer highs. There are two prevailing theories about this. One, many believe that the higher yields are a reflection of the strong U.S. economy, which can tolerate much higher interest rates than previously assumed. Two, others are concerned that yields are influenced by unpredictable factors like the increasing federal budget deficit and the government's reluctance to address it. The 10-year Treasury yield plays a pivotal role in determining interest rates throughout the economy, affecting mortgages, corporate debt, and more. While a 5% yield has been experienced in the U.S. before, it was unforeseen recently, especially after years of minimal inflation and accommodative Fed policies. The COVID-19 pandemic, however, triggered monumental changes, including huge government stimulus programs, heightened inflation rates, and shifts in the economy. Earlier this year, the assumption was that yields were high enough to cause a recession, but contrary to expectations, economic growth persisted. Challenges such as the Treasury Department's announcement to borrow more than anticipated and Fitch Ratings' decision to downgrade the U.S. credit rating further heightened concerns about the nation's fiscal health. Additionally, political issues in Washington and the potential government shutdown have fueled investor worries. Okay, so while some express concerns about the U.S. Treasury's reliability, others believe that the fiscal alarm is exaggerated and isn't significantly impacting bonds. New Jersey's existential crisis. Does Central Jersey even exist? Summary: New Jersey's Governor Phil Murphy recently signed a bill designating the state's middle section as its own distinct tourism region named Central Jersey. This move aims to settle a long-standing debate over whether Central Jersey really exists. However, there is controversy as some counties that are geographically located in Central Jersey feel more culturally aligned with the Jersey Shore. The push to recognize Central Jersey is partly due to the upcoming 250th anniversary of the U.S. Declaration of Independence. A significant Revolutionary War battles took place in this region. While state-sanctioned tourism zones receive funding and can be marked on the state's tourism map, residents have expressed mixed feelings. Some embrace the distinction, while others, especially from the Jersey Shore, resist being lumped into Central Jersey. The challenge ahead is how Central Jersey will market itself to stand out as a unique tourism destination. Next story: strike hurts car sector, spares buyers for now. Summary: the United Auto Workers UAW union, our ongoing strike, now in its sixth week, has disrupted the car industry, affecting automakers, parts manufacturers, and factory workers. However, consumers and dealerships have not yet been significantly impacted due to prior stockpiling of cars and parts. The UAW has escalated the strike, targeting a Stellantis-owned factory in Detroit, which is a significant plant for producing the Ram 1500 trucks. Currently, over 40,000 UAW members are on strike across Stellantis, General Motors, and Ford Motor facilities. The strikes have led to a series of shutdowns and layoffs across the assembly lines. As a result, 6,600 workers from the aforementioned companies have been temporarily laid off, and thousands more from the supply base have been affected. It is estimated that by the end of October, 40% of suppliers might lay off employees. If the strike continues, parts makers could suffer permanent financial damage and consumers might experience shortages. Despite the disruptions, the actual impact on dealers has been minimal. The strike is causing a loss of around 43,000 vehicles and factory output per week. This situation has allowed competitors such as Volkswagen and Toyota to capture a larger market share. UAW's strategy for this strike is unique, as it targets specific plants rather than a full-scale walkout at one company. While this has initially limited the financial strain on UAW members and automakers, the union has indicated that the strike could broaden if labor negotiations don't progress. So far, the strike has caused significant financial setbacks, with GM and Ford losing nearly $770 million each, and Stellantis losing around $384 million, as estimated by Deutsche Bank. The full impact on GM and Ford's finances will be revealed when they report their third quarter earnings. Despite the unrest, dealerships still have a substantial inventory for consumers, with companies having stock to last nearly 2 months or more. Parts are still being supplied to service centers, and currently there are no significant shortages reported. Let's continue on to U.S. news. Economy heats up, defying predictions. Summary: contrary to predictions earlier in the year, the U.S. economy is not sputtering, but rather accelerating. Instead of the anticipated negative effects of higher interest rates, economic data shows growth despite challenges like higher borrowing costs and global conflicts. Analysts who had previously predicted a recession are now revising their growth forecast upward. Employment is also on the rise, with significant job additions in recent months leading to more spending. The manufacturing sector is recovering, and major banks are reporting robust earnings. Notably, inflation has decelerated to 3.7% in September from 9.1% in June of the previous year, leading the Federal Reserve to pause further rate increases. However, the future of the economy remains uncertain. Potential outcomes include short-lived momentum, renewed inflation leading to further interest rate hikes, or sustained strong growth with inflation in check. GOP members hope to end Speaker rift. Tom Emmer is the highest ranking of the GOP Speaker hopefuls. Summary: House Republicans, after weeks of public disagreement, met with optimism regarding settling on a Speaker candidate. During a Monday meeting, candidates proposed strategies to unify the party and achieve key legislative priorities. A nominee vote is due today, Tuesday, with the full House voting soon after. Leading contenders include Tom Emmer, Kevin Hern, Mike Johnson, and Byron Donalds, a Trump ally. There is a sentiment of compromise emerging among the members. Challenges arose following the removal of former Speaker Kevin McCarthy and subsequent unsuccessful nominations of Steve Scalise and Jim Jordan. The GOP's slim majority complicates the selection process. Tom Emmer, holding significant internal GOP roles and backed by McCarthy, is a notable candidate. However, he faces criticism from Trump supporters, with Steve Bannon from Bannon's War Room on Rumble labeling him a prominent never-Trumper. U.S. moves to overhaul its H-1B visa program. Summary: the Biden administration is planning significant reforms to the H-1B visa program meant for high-skilled foreign professionals. This decision comes after the discovery of collusion among companies to amplify their chances of securing a visa through the program. Presently, approximately 85,000 visa recipients are chosen randomly from a lottery system. However, the government has identified instances where individual applicants sent multiple entries, with a substantial increase in total entries from 270,000 to 780,000 within 3 years. The new proposal ensures each visa applicant is considered equally regardless of the number of entries. Additionally, for the first time, entrepreneurs can self-sponsor for an H-1B visa, a significant shift for Silicon Valley, where many foreign-born tech startup founders struggle to remain in the U.S. Other amendments aim to make the visa more accessible and streamline the renewal process for previously approved applicants. Minnesota Representative readies long-shot bid challenging Biden. Summary: Representative Dean Phillips from Minnesota is anticipated to announce a challenging bid against President Biden in the Democratic Party. Presenting himself as a younger alternative to the current 80-year-old president, Phillips has reportedly been urging other Democrats to challenge Biden. Yes. Although he has yet to confirm his plans officially, he's hinted at announcing his presidential campaign soon in New Hampshire. The Democratic National Committee, DNC, hasn't sanctioned the state's primary due to scheduling conflicts. Oh yeah. While Biden supporters are expected to campaign through write-ins in New Hampshire, Biden is not likely to file for the primary ballot there. If Phillips enters the race, it could divert attention from Biden's campaign, which is already preparing for a potential rematch with ex-President Donald Trump. On to business and finance news. UAW strike hits big Stellantis plant. Summary: the United Auto Workers UAW union has intensified its ongoing strike against Detroit's major car manufacturers by shutting down a key Stellantis pickup truck plant, which employs 6,800 workers in Sterling Heights, Michigan. This plant produces the highly profitable Ram 1500 pickup truck. The cumulative number of UAW-affiliated workers striking against Detroit's major automakers has risen to over 40,000. Despite Stellantis offering a 23% wage increase and a 50% increase in contributions to employee retirement plans, UAW found their proposals, especially related to cost of living adjustments and pay for temporary workers, insufficient. The union has adopted a strategy of expanding strikes at specific locations, putting pressure on companies while ensuring there are funds to support striking workers. The UAW president, Shawn Fain, insists on further concessions, especially regarding wages and the status of temporary workers. The strike, ongoing for 6 weeks, marks the first time the UAW has targeted all 3 major car companies simultaneously. Next story, Roche sets $7 billion deal with Roivant. Summary, Roche Holdings will acquire Telavant Holdings, a developer of promising bowel disease treatment, from Roivant Sciences and Pfizer, in a deal valued at over $7 billion. Roche will pay an upfront amount of $7.1 billion and a subsequent $150 million based on near-term milestones. The acquisition grants Roche the rights to commercialize the RVT 3101 drug in the U.S. and Japan. This drug shows potential for treating inflammatory bowel disease and possibly other conditions. This move is part of a trend where large pharmaceutical companies are seeking acquisitions to strengthen their autoimmune drug portfolios. Roivant, co-founder by Republican presidential candidate Vivek Ramaswamy in 2014, specializes in reviving drugs that have faced development challenges. Roivant and Pfizer formed Telavant to develop and commercialize RVT 3101 with ownership stakes of 75% and 25% respectively. Stock trading amateurs come up winners. Summary. Amateur stock investors have proven to be savvy players in the stock market, often outpacing traditional notions of smart money. Jeff Beckman, an example of a long-term individual investor, has grown his stock portfolio to roughly $1 million over 4 decades, demonstrating faith in equities over more conservative assets. According to Vanda Research, since 2014, the average individual stock portfolio has increased by approximately 150%, outpacing the S&P 500's growth of 140%. These amateur portfolios have a significant concentration in tech giants like Apple, Tesla, and Nvidia, which have seen impressive stock gains over the past decade. The trend among individual investors leans towards investing in what they know and use, a sentiment shared by platforms like Robinhood and endorsed by renowned investors like Warren Buffett. Most U.S. households indirectly own stocks through equity funds, and about half have assets in retirement accounts. One advantage individual investors have is the lack of pressure to constantly outperform benchmarks, unlike professional fund managers. While trading activity among these investors has decreased from pandemic highs, their influence remains significant in the stock market. The democratization of stock market knowledge, partly due to online resources, is changing the investment landscape. WPP fires detained staffer of China unit. Summary. WPP has terminated an executive from its ad buying unit, Group M, who is currently detained in China on bribery charges. The Shanghai police reported that 3 individuals from an advertising company, later identified as one current and 2 former employees of Group M, were detained for bribery. The currently detained individual from WPP is Raiken D. Two other executives had already left Group M before the recent police raid at the company's Shanghai office. This situation adds to the growing concerns among foreign companies in China regarding police actions, such as raids and detentions. The Chinese government has labeled the Group M case as commercial bribery. Group M is the world's largest ad-buying company, having handled around $63.9 billion in advertising purchases in the previous year. Smaller banks try shrinking their way back to health. Summary: regional banks are facing significant challenges as they've increased payouts to retain depositors, but profits have still taken a hit. After a tough third quarter with significant profit drops at KeyCorp, Citizens Financial, and Truist Financial, many banks are looking to downsize to stabilize. For instance, KeyCorp aims to simplify, PNC Financial plans layoffs, and Citizens is exiting the auto loan sector and reducing its mortgage business. These moves come as deposit costs rise due to the Federal Reserve's rapid interest rate hikes to tackle inflation, making it harder for banks to attract and maintain deposits. While higher rates usually benefit banks, the rapid increase has unexpectedly escalated costs for them. Mega banks like JP Morgan, Chase, and Bank of America have been less affected thanks to their diversified business operations. They reported a 27% increase in their collective third-quarter earnings, reaching about $30 billion. Smaller banks are increasingly merging, with 34 bank deals in the third quarter totaling nearly $3 billion in value. Although banks state that the situation could be graver, their earnings have undoubtedly decreased. The average deposit rate paid by major regional banks surged to about 2% in the recent quarter from almost nothing the previous year. This has led to a reliance on costlier funding alternatives, with interest expenses seeing a threefold increase at several banks. While Americans continue their spending habits, rising interest rates and economic pressures could indicate future challenges, especially for banks with significant commercial real estate investments. Tesla subpoenaed over autopilot. Summary: the Justice Department has issued subpoenas to Tesla seeking more information about the carmaker's autopilot technology. This is part of an investigation into whether Tesla misled consumers and investors about its autopilot's performance after several accidents were reported involving this feature. The Justice Department has also inquired about potential personal benefits provided to CEO Elon Musk since 2017, which includes a proposed house for him. Besides autopilot and Musk's benefits, the department is seeking details on related parties, vehicle range, and certain personal decisions. Despite these inquiries, Tesla has stated that no government agency has yet found any wrongdoing in their ongoing investigation. SpaceX lands deal for key Europe mission. Summary: SpaceX has secured a contract to launch up to 4 of Europe's main navigation and communication satellites into orbit, further establishing its presence in Europe while local competitors face rocket launch delays. The deal, signed with the European Space Agency, includes 2 launches next year, each carrying 2 Galileo satellites. These satellites are vital for the EU as they ensure its independence from the US GPS system and China, and also facilitate encrypted communications for European governments. This agreement marks the first time EU institutions have chosen SpaceX to launch satellites containing classified equipment. Typically, Galileo satellites are launched from French Guyana, but due to the SpaceX deal, they will now be launched from the US, prompting US-EU discussions about protecting classified information. European officials had previously been hesitant to rely on a U.S. company for such important launches, but given delays in the Ariane rocket program and the refusal to use Russian rockets after the Ukraine conflict, they had limited options. This collaboration with SpaceX comes amidst Elon Musk's complicated relationship with EU officials and increasing reliance on SpaceX due to issues faced by European rocket providers. While the current Galileo satellites in orbit are functioning well, the addition of new ones would enhance the system's reliance. However, there's uncertainty if SpaceX will be chosen for further Galileo launches post this contract. The future of these launches might hinge on the progress of the Ariane 6 rocket, which is expected to debut in 2024. Kardashians extends shapewear line Skims to men. Summary. Kim Kardashian's shapewear brand Skims is expanding its product line to include men's items including boxers, briefs, t-shirts, tank tops, and leggings. Kardashian believes there's a gap in the market for premium men's products that Skims can address with its designs and materials. Skims co-founder and CEO Jens Grede sees the current men's underwear market as mainly focusing on multi-packs and discounts and believes Skims can introduce a new level of comfort and performance. The product will be priced between $16 and $98 and will be available in sizes from extra small to 5X. The men's collection will feature a neutral color palette and be promoted with the help of star athletes like Neymar, Shai Gilgeous-Alexander, and Nick Boza. The brand, valued at $4 billion, is set to achieve $750 million in net sales this year. While there's no confirmed date for an IPO, Grede believes it's a future possibility. After 3 years of development, the men's line could eventually expand to include pajamas and loungewear. Skims will be launching its first stores in New York and Los Angeles next year, selling both men's and women's products. Initially, the men's line will be sold exclusively online and in Skims stores, but there are plans to expand to other retail partners in the future. Royal Philips raises guidance after logging quarterly profit. Philips expects comparable sales to grow 6% to 7% this year. Summary. Royal Philips, the Dutch health technology company, has revised its full-year guidance upwards after reporting a net profit in the third quarter due to increased sales across all sectors and regions. The company now forecasts a 6% to 7% rise in comparable sales this year, up from its earlier mid-single-digit growth prediction. The adjusted earnings before interest, taxes, and amortization, EBITDA, margin is anticipated to be between 10% to 11%. For the quarter, the net profit for shareholders was €88 million, or $107.1 million, a significant turnaround from a €1.33 billion loss in the same period the previous year. Sales for the quarter reached €4.47 billion, an 11% increase on a comparable basis. The diagnosis and treatment and connected care sectors saw double-digit growth, while the personal health sector experienced high single-digit growth. The company reported EBITDA of €457 million, up from €209 million. The EBITDA margin stood at 10.2%, largely due to heightened sales, improved pricing, and productivity initiatives. Royal Philips highlighted savings of €258 million in the quarter from its restructuring and productivity schemes. CEO Roy Jacobs emphasized the company's commitment to patient safety, supply chain reliability, and a streamlined operational model. Completing the Philips Respironics recall is the board's top concern, with most sleep therapy devices already addressed and ventilator remediation ongoing. Intuit looks to humans to rein in AI. Summary: Intuit, the company behind TurboTax software, is employing human moderators to oversee its new generative AI-based assistant, Intuit Assist. This assistant, which is currently available to a limited user base, utilizes large language models informed by internet data and refined using Intuit's proprietary data. Given the potential risks associated with AI, Intuit is hiring 8 full-time moderators to oversee the AI system's inputs and outputs. This will help in preventing the dissemination of sensitive company data and ensuring accurate and safe responses to financial queries. AI models like OpenAI's ChatGPT-4 can produce harmful content based on the vast data they're trained on, according to this article. As a result, moderation needs to occur both during the AI's training phase and when reviewing its outputs. Intuit's developing content moderation system uses another large language model to identify and block inappropriate content automatically. Any questionable content will be reviewed by human moderators, and the feedback will help refine the system. Customers can report if they feel their prompts were incorrectly flagged or if they find the AI's response inappropriate. While specialized AI content moderation firms don't exist yet, Intuit is training its team using experts skilled in moderating social media content. The company hopes that in the future their moderation AI will handle most of the content review, but currently human intervention is essential. James Manning team up on series. Summary: LeBron James and Peyton Manning, two sports legends, are collaborating in the entertainment sector. James's company Spring Hill is discussing with Manning's Omaha Productions about developing a show inspired by Netflix's Quarterback. This new series would focus on the lives of professional basketball players. Higher Ground Productions, established by former President Barack Obama and Michelle Obama, and the National Basketball Association are also part of these discussions. The show is likely to be broadcasted on Netflix. Omaha Productions previously created Quarterback, which highlighted 3 NFL quarterbacks during the 2022 through 2023 season. Manning, a 2-time Super Bowl champion, founded his media company in 2020 and has other programs like Monday Night Football with Peyton and Eli on ESPN2. Vista Equity agrees to $4 billion buyout of EngageSmart. Summary: Vista Equity Partners has agreed to a $4 billion deal to acquire the business software firm EngageSmart. The proposed buyout price is $23 per share, which led EngageSmart's stock to rise by over 10% in pre-market trading, eventually closing 12% higher at $22.60 on Monday. EngageSmart, headquartered in Braintree, Massachusetts, specializes in cloud-based software for clinicians and provides electronic invoice solutions for various sectors, including governments, financial services, and nonprofits. While General Atlantic currently controls the New York-listed software developer post-acquisition, Vista will own approximately 65% of EngageSmart, with General Atlantic retaining the remaining share. EngageSmart serves over 100,000 customers, predominantly small to medium-sized businesses, and reported a profit of $20.6 million in its recent annual overview. Vista, which oversees assets exceeding $100 billion, has been active in deal-making, with recent acquisitions including KnowBe4 and Duck Creek. However, the deal-making landscape has seen a decline this year due to factors like political uncertainty, market volatility, and increased interest rates. The move by Vista indicates a potential resurgence in the willingness of parties to finalize sale prices. Food earnings show buyers want more for their money. Summary: U.S. consumers are looking for ways to maintain their eating habits without paying more, as evidenced by third-quarter earnings from food-related companies. Domino's. Their carry-out business, where customers don't pay fees or tips, saw growth while delivery decreased. The company now plans a partnership with Uber Eats and has introduced promotions to entice customers, such as a buy one, get one free pizza deal and modified loyalty program rewards. Conagra. The company, owner of brands like Bird's Eye and Chef Boyardee, observed consumers opting for more hands-on food preparation and buying food that serves multiple people even if they don't eat together. McCormick also noticed customers buying larger spice containers at the same purchase rate as smaller ones. Lamb Weston. This frozen potato seller highlighted that quick service restaurants are seeing more traffic than pricier full-service restaurants. Even after raising prices, the rate at which consumers add fries to orders remains high. PepsiCo. While sales at convenience stores remain strong, there are concerns about the future. The chief financial officer noted that some consumers are gravitating towards cheaper items and smaller pack sizes. Upcoming earnings reports from companies like Coca-Cola, Hershey, and Chipotle are anticipated in the following days. Global government bonds, U.S. 2-year coupon rate of 5%. The latest yield is 5.06%. Previous yield was 5.082%. A month ago, U.S. 2-year treasuries were 5.123%, so they've gone down a little bit. And yields were at 4.489% a year ago. U.S. 10-year treasuries, the coupon rate is at 3.875%. Latest yield closed at 4.836%. Previously it was at 4.924%. A month ago, 4.438%. And a year ago at 4.212%. Moving on. Moving on, markets digest equities. Let's look at the Dow Jones Industrial Average. The Dow Jones Industrial Average closed at 32,936.41 points yesterday, Monday. It was down 190.87 points, or 0.58%. Trailing PE, the last was 22.88. A year ago was 19.59. The estimate is currently at 18.47. The dividend yield is 2.22%. An all-time high was reached on January 4th, 2022 at 36,799.65. It's well below its 65-day moving average. Probably, haven't looked at it, but it's probably below 30 on their relative strength index too. It's a little bit perhaps oversold right now. The S&P 500 index closed at 4,217.04 points yesterday, down 7.12 points, or 0.17%. Its trailing PE ratio is at 20.14, and a year ago it was at 18.27. The current price earnings estimate is 19.48 points, or 19.48 rather. Dividend yield 1.68%. All-time high was reached on January 3rd, 2022 at 4,796.56. It's well below its 65-day moving average as well. The NASDAQ Composite Index closed at 13,018.33 yesterday, up 34.52 points or 0.27%. The trailing PE ratio is at 29.89. A year ago is at 23.07. Price to earnings estimate is roughly 26.52. Dividend yield is at 0.87%. All-time high was reached on November 19, 2021 at 16,057.44. But anyway, as far as the trailing PE goes, everybody always talks about how the PE should be around 16 to 18, but according to the S&P data, the modern market average should be around 20. So we're kind of in line with that. We already talked about the industrial average closing and everything. The transports down yesterday significantly, as transports are a leading indicator. But if you look at the 3-year annual, it's up 6.3% year to date, 9% for the year for the 52-week range, and 3-year annualized return is 6.2%. So one day doesn't make a trend. We talked about the NASDAQ, the Russell 2000, high yesterday at 1687, low 1662, closed at 1665, down 14.91 points or 0.89%. 52-week high is at 2003, the low 1665. Wow, that was yesterday. The 52-week low was yesterday. Down 4.7% for the 52-week period. Year to date, it's down 5.4%. Annualized at 0.5%. And we can look at semiconductors. We're down. The VIX volatility is down. That's not really the VIX, but that, I think, yeah, that's the VIX. Anyway, let's move on. Consumer rates and returns to investors. The Fed fund rates is at 5.25, 5.5% roughly. Yeah, Fed funds rates 5.25 to 5.5%, and it's, hasn't changed much. 30-year mortgages fixed. This is not what's actual. Fannie Mae gives us that number, but it's at 8.21%. Very high. It's at its 52-week high on the range. That doesn't bode well for lending, but obviously. Currencies. I like to look at the Dixie, but we have the Wall Street Journal dollar index here. U.S. dollar versus year-to-date change, up 3.66% year-to-date. Very strong. The nicest house in a bad neighborhood, I guess you can say. Commodities. The CRB index closed at 283, down 2.61 points or down 0.91%. 52-week highs at 290.29. Low 253, a change up 4.26% for the 52 weeks period. Year to date up 2.04%. Crude oil closed at $85.49, down $2.59, down 2.94%. High 93.66. Percent change 1.08%, and year to date up 6.52%. Natty gas 2.926, down 43% for the year. Gold closed at 1976, and it is up 19.87% for the year. Year to date up 8.61%. Very interesting. Let's go to you know what? I didn't look at the yields. Let's go to the yields. Anyway, here's the Treasury yield. it's still inverted. But if you do the math on the yields, you just take the difference between the 2-year and the 10-year, and that gives us, I think I worked it out. We're inverted basically still. Forget how much. Yeah, we're inverted right now. Just the difference between the 5%. It's roughly like 0.25, negative 0.25% inversion. But yeah, let's keep going. CPI since September was at 3.7%. Core CPI is at 4.1%. That obviously doesn't change frequently. Fed funds rate, we already went over that. The Fed funds effective rate is 5.33%. And the Fannie Mae, so this is the 30-year mortgage. It's roughly around 7.5%. So that's the actual you're going to get when you actually go through the process of buying a home. Okay, now let's move on to the next story. Markets and finance. Markets and finance, S&P 500 falls as investors dive back into bonds. Summary. On Monday, the bond market witnessed activity as the 10-year U.S. Treasury yield surpassed 5% for the first time since 2007, before retracing to 4.836%. This uptick was seen as a buying opportunity by some investors. Consequently, the stock market presented a mixed response. The Dow Jones Industrial Average fell by 0.6%. The S&P 500 decreased by 0.2%, while the Nasdaq Composite saw a 0.3% rise. This stock stagnation in recent months stems from the concerns that the Federal Reserve may prolong high interest rates, impacting borrowing costs across various sectors. Jerome Powell, the Federal Reserve Chairman, hinted at tighter monetary policies if inflation persists. The challenge for investors lies in predicting when the bond yields will top out, giving them the chance for secured returns and potential future price gains if central bank rates decrease. Perhaps they'll go lower and yields will go higher, and you can catch them at a better opportunity, or you can just dollar cost average in. So Ken Moraif of Retirement Planners of America commented on the global anticipation to lock in on these rates. As bond yields receded on Monday, tech giants, referred to as the Magnificent Seven, saw their shares rise. Notable increases included Amazon.com at 1.1%, Meta at 1.7%, Nvidia at 3.8%, and Tesla, Apple, Microsoft, and Alphabet also saw positive movements. On the earnings front, about 73% of S&P 500 companies reported better than expected results, slightly below the 5-year average of 77% for the corresponding period. That's still pretty darn good. Morgan Stanley shares decreased by 2%, reaching their lowest since February 2021 due to a reported 9% drop in profits. The energy sector faced challenges as Chevron's announcement of a $53 billion deal to purchase Hess led to a 3.7% dip in its shares and a 1.1% decline for Hess. U.S. crude also went down by 2.9% to $85.49 a barrel. Internationally, the stock's Euro 600 saw a 0.1% decrease. Japan's Nikkei 225 dropped 0.55%. Hong Kong's Hang Seng Index decreased by 0.4%, while the Shanghai Composite increased by 0.7%. S&P 500 futures experienced a 0.3% rise. China's stock rout worsens as doubts swirl. Summary: China's major stock market is facing significant challenges. The CSI 300 Index, a key benchmark that includes shares of the top companies listed in Shanghai or Shenzhen, dropped 1% on Monday, marking its lowest level since February 2019. This decline is the fourth in a row, resulting in a total loss of over 10% for the year. The Shanghai Composite Index also saw a 1.5% decline. The global sell-off intensified by the Israeli-Hamas conflict has impacted Chinese stocks. However, the downfall is further exacerbated by domestic concerns, making China's market one of the worst performing in Asia. Recent reports from Chinese state media about a probe into Apple's prominent iPhone supplier Foxconn Technology have heightened investor anxiety. Foxconn Industrial Internet's shares, part of the CSI 300 index, plummeted 10% on Monday, the steepest drop permitted by the exchange. Since August, international investors have withdrawn more than $22 billion from mainland China's yuan-dominated A-share market. Many local retail investors have also retreated from the market. To curb the market's downward trajectory, Chinese authorities have introduced measures such as tightening regulations against short selling, reducing stock trading taxes, and discouraging major shareholders from selling their shares. A lot of good that's going to do. Despite efforts like the sovereign wealth fund's $65 million investment in shares of four major Chinese banks, market sentiment has not improved. In January 2023, there was a surge of optimism regarding China's economic outlook due to the lifting of pandemic-related restrictions and an emphasis on growth. However, this optimism has since faded because of political risk. Xi Jinping. The country's housing market is in decline, affecting consumer confidence, and there has been a drop in exports. Additionally, property giant Country Garden recently defaulted on a dollar bond payment after months of financial struggles. Goldman Infrastructure Fund raises $4 billion. Summary. Goldman Sachs Group's asset management division has secured $4 billion for investment in medium-sized infrastructure assets, tapping into the favorable political and economic landscape for this sector. The fund, named West Street Infrastructure Partners 4, achieved its target amount and has already allocated $2.3 billion to 8 projects. As of June 30th, Goldman Sachs managed over $2.7 trillion in assets. The new fund has invested in companies like Syntheca Energy, Verdalia Bioenergy, and Gridstore. It has primarily drawn capital from institutional investors, supplemented by high net worth individuals, Goldman Sachs, and the bank itself. Its preceding funds, West Street Infrastructure Partners 3, finalized in 2017 with $2.5 billion. Investments will span infrastructure sub-areas such as energy transition, digital infrastructure, transport, logistics, and social infrastructure. The infrastructure sector is set to profit from a significant trend like the move towards a greener economy, digitalization, and evolving demographics. The sector in the U.S. is also likely to benefit from the $1 trillion infrastructure legislation passed in 2021. Exchange-traded funds, right here. I like to look at XLY, that's consumer discretionary, up 17.6% year to date. It's done extremely well. Consumer staples down 9.9%. Energy up 1.5% year to date. XLF is financials down 6.4%. Healthcare sector down 6.3%. Industrials down, or it's flat for the year. Looking for others like XLK. Where's that at? XLK, this is the technology sector ETF, up 31.9%. So if you were just a little bit risk on this year, not a little bit, but a lot, you would have done really well investing in consumer discretionary and technology. Energy did okay too. Anyway, so I like to look at exchange traded funds just to kind of see where the sectors are at. They don't really show basic materials on here, which is XLB, or XLC, which is communications, and I don't see XLRE, which is real estate, and XLU, which is utilities. But anyway, that's kind of getting a flavor for what It's been going on this year. All right, next section, herd on the street. Oil deals signal likely land grab. Summary: following over $110 billion in oil mega deals this month, the energy sector is abuzz with merger and acquisition activity. Chevron's acquisition of Hess and Exxon Mobil's purchase of Pioneer Natural Resources have sparked interest, with Devon Energy potentially targeting Marathon Oil and Crown Rock and Chesapeake Energy considering an acquisition of Southwestern Energy. A diminishing pool of high-quality shale inventory and fewer large targets in the Permian Basin may lead to an accelerated pace of deals. Major producers in the Permian, such as Occidental Petroleum, Devon Energy, and Diamondback Energy, are significant enough to either be potential targets or acquirers. Smaller producers in the Permian include Matador Resources and Permian Resources. The market is primed for consolidation due to an overabundance of public energy companies relative to investor interest. And then that's all you can do if you've got a lot of cash, really. This has led to a widening valuation gap between larger energy producers and smaller ones. While the trend of consolidation looks set to continue, the pace and nature of deal-making remains uncertain due to potential disincentives for executives and boards of target companies. However, such consolidation, if resulting in reduced rig counts, should be favorable for commodity prices and returns, offering a positive outlook for energy sector investors. It has never been a worse time to buy instead of rent. The average monthly new mortgage payment is 52% higher than the average apartment rent, and it just really depends regionally, by the way. Usually the current U.S. housing market is challenging for first-time buyers, with the cost of buying a home surpassing the cost of renting to the most extreme levels since 1996. The average new mortgage payment is now 52% higher than apartment rents. Why would you ever buy a house with that number? I would rent and wait for prices to come down and just buy some bonds or Bitcoin or gold or some dividend-paying stock. Anyway, so a significant deviation from the historic norms. Historically, costs for buying and renting should be comparable, considering homeowners have added expenses such as repairs. Post-financial crisis, due to low interest rates and ample housing supply, buying became cheaper than renting. However, with today's high housing prices and increasing interest rates, the ownership premium is soaring. The increase in housing costs has deterred potential buyers from entering the market. A significant drop in prices could balance the market, but with 80% of current U.S. mortgages having an interest rate below 5%, homeowners are incentivized to stay where they're at. Despite the current situation, homeowners face challenges in moving or downsizing, and while landlords might typically benefit from higher rents in such a situation, a surplus of new apartments has limited rent growth. The result is institutional investors facing challenges in apartment stocks like Avalon Bay Communities and Equity Residential have seen declines. In this complicated housing market, perhaps only perpetual renters are benefiting. Ozempic maker has a weight problem. Novo Nordisk, the company behind diabetes and obesity drugs Ozempic and Wegovy, recently surpassed LVMH to become Europe's most valuable company. However, its significant market value presents a unique issue. Currently, Novo Nordisk's market value stands at $430 billion, making up an unusually large portion of the Nasdaq's OMX Copenhagen 25 index. Such a large weighting is problematic because many investors and regulators limit individual stock holdings to no more than 10% of a fund. Consequently, Danish fund managers often sell Novo Nordisk shares when they exceed this limit. This has not halted the company's stock rise, but it might have seen even better performance if not for these forced sell-offs. In comparison, the U.S. market being larger allows for more flexibility, with its most valuable company, Apple, accounting for only 7% of the S&P 500. This might explain why U.S.-listed Eli Lilly outperforms Novo Nordisk in terms of valuation. Moreover, Eli Lilly's portfolio includes an Alzheimer's drug and positive data on obesity drugs. Novo Nordisk's large share in its local index is unlikely to change due to its deep roots in Denmark and the significant control of a foundation has over its share structure, while Novo Nordisk aids and others' weight problems, addressing its own market weight issue proves more challenging. And that's it for today, folks. If you've stuck around, thank you, and like, subscribe, share, comment, and we'll keep doing this and streamline the process a little bit more as we go along. I'm going to do this Monday through Saturday whenever the market's open, and we'll go from there. Thank you for listening. Have a great day.